Good morning. Welcome back to the Junius Maltby channel. Thanks for joining us today for today's conversation and unscripted discussions regarding current events in the news. Interesting things in the news. We've talked about this very issue in the past and covered it. You can find it in video headlines of the archives here on the channel. But negative interest rates, they're a real thing. They happen, and the mainstream financial media outlets, CNBC and MarketWatch, are all applauding the decision of the Bank of Japan that when they did a surprise cut, moving interest rates into negative territory. That means it's going to cost savers money to keep money in a financial institution. It's pretty much an incredible central bank move when it's done, and it takes quite the cojones, I would say, because as a saver, as any saver, all of you out there, anyone with money, that should be immediate grounds for termination of all accounts with any financial institution. Pull your money out. Stocks rally on Bank of Japan surprise cut. This is a sign, if anything, this is a weather pattern in the financial world that should definitely show all of you things are not as good as they seem, and they're just going to continue to worsen, and nobody knows what they're doing. Here we have the Bank of Japan putting interest rates into negative territory. You've got the Federal Reserve over in the United States trying to raise interest rates. You have oil prices plummeting. You have basically panic and bloodshed in every facet of the financial world right now, other than really gold. It's holding strong, and if anything, has been going up this year in reaction to all of this chaos. But the Bank of Japan unexpectedly cut a benchmark interest rate below zero on Friday, stunning investors with another bold move to stimulate the economy as volatile markets and slowing global growth threatened its efforts to overcome deflation. Global equities jumped. The yen tumbled and sovereign bonds rallied after the Bank of Japan said it would charge for a portion of bank reserves parked with the institution, an aggressive policy pioneered by the European Central Bank. So those are the architects of it, if you will. Now, another sign that things are not healthy or not as good as the media would like to lead you to believe. You know that archaic and barbarous relic that we discuss on here so often. We talk about gold because, as you know, you and I we're gold bugs, right? We're just ignorant little coin collectors that exist on the peripheral of what is reality. And we're fascinated and infatuated by this lump of yellow metal that has in itself no value or worth. Well, there are other people that share our confusion and our infatuation, and those other people happen to be countries, and more specifically, banks of countries. For example, the Bundesbank of Germany took more than 200 tons of its gold back last year. We've discussed this and talked about it at length, and we've covered it in the past, but this is in the news right now. Germany's still moving in that direction, and it's still on schedule, and it's still making the financial news. In uncertain times, Germany takes more gold home. Frankfurt, Germany's Bundesbank, took more than 200 tons of its gold back last year. And in the wake of the Eurozone crisis, many ordinary Germans want to see more of the 3,381 tons of gold in vaults at home, and some have even questioned whether it still exists, prompting the Bundesbank to recently publish a long list of gold bars. So a recession is coming. This is from the Wilmington Trust, Think Advisor. These earnings suggest we may be headed for a recession. These are all 18 and 22 hours ago, those stories. Oil price drops, sparks global recession fears. Danske Bank, there's a lot of discussion right now about recessions possibly coming in 2016. I know Peter Schiff came out with some statements regarding very troubled waters ahead and just how much chaos we might be facing. Now, I want to share with you real quick. We just rapidly covered the news. We just kind of brushed over some things. Great. None of those articles that we covered really deserve us to dive into them and spend the entire topic of conversation today on their issues. I wanted to use them more as a segue into this discussion because, we keep beating the same dead horse. Yeah, 2016 is looking pretty bad, and the economy itself for the globe, for everybody, is looking pretty darn bad going into the future. Well, what do you do about it? We've talked about solutions all here and there, and we've covered this for years on the channel now. One of the main things we like to discuss is hedging and protecting ourselves in precious metals, gold, silver, platinum, palladium. And as many of you know, you've come to know me very well here, and I'm more of the gold hawk, if you will. I'm a big fan of the gold. Well, take a look at this snapshot here. Gold has only been legal to own for 45 years. That's not a very big window in time. In my opinion, this makes gold very difficult to compare to your traditional asset and investment vehicles because gold spent a lot of its time in hibernation as an investment vehicle. It wasn't legal to own before 1974. You couldn't own it. So, here in the United States anyway. So investors were forced to adapt and use other vehicles, other means. Now, as we all know, in 1971, Nixon closed the gold window. We've covered that. 1974, gold became legal. So look, right about when gold became legal, what took place? You see a flurry of activity. Now, a lot of people judge gold's performance, its investment ability, the health of it as an asset, whatever word you want to use. They judge it mainly based upon that 10-year window in time between about 1974 and 5 up to like 1985 on that flurry of activity. And you can see there it's got some gains in there noted in gold, and then in the red you can see the losses. So there was some volatility, and a lot of people back then jumped on the gold bandwagon. Some of them lost their shorts. There were some pretty outlandish predictions of where gold would go back then, and then it kind of petered out, and you see that dead space there between like early 1980s up to about even the year 2005. Gold just didn't do a whole lot. Took that dip there in 99, browns down, but then you can see it's starting to pick back up again around 2005, the price of gold, and we had some up years there, a lot of ups, and then you had a couple of good down periods there. But if you look at the very top, the biggest win and loss streaks for gold, it has 31 gains and only 18 losses. Those aren't bad odds. Now, we're going to move on here, but just remember this chart, come back to it, check it out, because that's it. That's really all you have to go on for the life of gold. It's only really existed in a sense that you and I could go and buy an ounce of it or two and use it as a vehicle like this. Before that, it was illegal to do. Now, even with this, it's still shackled and bound, I would argue, by regulations and the taxes placed upon it, because, as you know, the government hates gold. The states, the statists, they do not like the liberty and freedom that gold offers the individual. So therefore, it's shackled by taxes and other aggressive laws and tactics that are executed upon those who own it and the asset itself. Now, here you go. This is the 1980 gold spike. This is more of a micro view of that period in time where there was a lot of activity, a lot of volatility with gold, and it blew up there for a while, and then it dipped again. And as we discussed, some people base a lot of their judgments on gold based upon this particular period in time, which I would deem as very unfair, because you wouldn't do that with every stock, mutual fund, other areas people like to put their money. If you did, well, then Apple or any of them could be ruled a horrible investment choice, right? Keep going here. Let's just keep going. Look at the gains versus the losses there. Again, some of the biggest gains there in the 70s and 80s. And then you had some losses in the 80s. Again, that's a volatile period. I would, if you could take out all the activity from the 70s and 80s, when it was first legal and first became, we were, as investors and people that were out there in the financial world, they were just learning. They were babies. Everyone was unfamiliar with how to treat gold and how it would be incorporated into the investment world, and how would it be used, how would it act and behave through global trade. It had been decades upon decades upon decades since the last time it was exchanged in this way or allowed to be owned. And then you can kind of see the down by 2010s, we're only 5 years into this decade, but not as much. It's kind of a wash for it. How do you think the fact that gold has only been legal for 45 years affects its reputation? Do you agree or disagree that the 80s, that period in the 80s, had a lot to do with the reputation gold has today? Because, there's a lot of these silver-haired investors that you see working in Wall Street that remember those times probably pretty clear. And a lot of their judgments on gold probably stem from those early years when gold first became legal. And this is why I think that you have to throw those years out. And we got to look at the future. We can't look back. Looking at the past is not going to do anything for us. You can't look at the past with gold to judge what it's going to do in the future. Because in my opinion, gold's a brand new investment vehicle. 45 years in the big scheme of things really is nothing. They've been trading wheat and pork bellies and rye and copper and all those things since going back early 1800s up till now, and it's still the 1700s, you'd even say. I mean, England, the United States, all the banks, the stock markets, they've been trading all those other commodities kind of on a routine basis for 200 years or so, and gold basically got shut out of it in a way, in a very large way, and is just now kind of learning the ropes and being incorporated back into the fold, but even so on a very unequal playing field. Because as you know, gold is not treated like everything else. It's not treated the same. You see it in the headlines. You see it in the controversy that surrounds it. I mean, there's not a whole lot of controversy surrounding wheat or pork bellies, is there? You don't see the financial mainstream media making fun of the guys that are investing in cattle or grains. Very interesting the way it's treated as a commodity. And thankfully their opinions do not really matter all that much, because most Americans, and I don't care if this offends anyone or not, most Americans are just plain too stupid to know what gold is, what the value of it is, or the history of gold. And that's a fact. People are historically ignorant. They're ignorant to the timeline that exists in this country, what's taken place historically. Most people can't recount the dates probably for anything that's taken place prior to their birth. They just don't know. They don't care. They don't know when Vietnam was, when the Korean War was. They just don't know. Most Americans do not know their history, and forget about even knowing about gold. It's never taught or discussed in any economics classes, really. If it is, it's referred to disparagingly. It's referred to in a negative way. Americans are stupid. It's a fact. I mean, come on, look at TV today. Look at Dancing with the Stars. Look at all the shows out there. All these dumb celebrity shows, these reality shows, the non-news, the actual mainstream, what people call news, what's on there, what's discussed and talked about. It's just shallow, immaterial, just garbage. It's refuse. We're surrounded by it. And things of, even things of real value, such as gold, are not valued or discussed or taught or learned. They don't own gold. No Americans own gold. Nobody does, even globally. But surely even America, one of the wealthiest, quote, wealthiest countries in the world, and less than 1% of the population has ever even seen gold that's not in the form of jewelry. That is, they've never seen bullion. They've never held gold coins or even handled or seen one. And that's just the way it is. It's a sad state of affairs, but the time of reckoning for all of that and paying the piper, it's definitely around the corner. You know, it'll come at some point. Whether it's through hyperinflation, whether there's a severe economic contraction or collapse. And, you know, gold's not going to save you, but it might lessen the blow. I've never ever believed or said that gold was going to make us rich, make anyone rich for that matter. But it will lessen the blow. It'll protect some of your wealth and help you transfer it into the next phase or the next period in history where whatever economic world that is, whatever system is set up at that point in time. It's like I've said in the past, gold's kind of like a time machine where you can put your wealth inside of it, you can put your capital inside of it, you can take your cash, your hard-earned currency, whatever you've worked for, the stores of your labor and the value of your labor, and put it in that time capsule of gold and then transport it into the future. And it can safely pass through whatever takes place in between the here and now and the future, because who knows what will happen to people's wealth, their estates, and their labor, the store of their labor, when things go south, things get bad. It could be wiped out, erased, it could vanish, and well, gold will hopefully help protect many of you from that type of situation. And again, this is kind of just a rant today. We looked at some headlines. We looked at that brief period of time where gold acted the way it did. But thanks for being part of the Junius Maltby channel today. Appreciate you guys joining in the conversation, the discussion. Thanks for being here.